Hi again, I'm Dave Scott from US Acute Care Solutions. In the next few minutes, I'm going to talk to you about your insurable risks to your wealth creation. Insurance is a wonderful tool to make sure that you complete this journey to wealth creation that you've started down by becoming a physician. Having said that, many of the financial services people you will encounter in residency are actually insurance agents as their main source of income. You want to make sure that you work with a financial planner with a broad background who will give you balanced advice in this area. A quarterback for your financial future. You'll certainly be wise to have several types of insurance, but each person's situation is different in the type and the amount that is most suitable for you. The first type that you may think of is malpractice insurance. You're going to be required to have adequate malpractice insurance by the hospitals or insurance companies that you deal with. The main point here with regard to your financial risk is that you're covered. Being sued for malpractice is an emotionally trying and frankly miserable experience, but luckily, the financial risk to your personal wealth is actually very, very small. In 20 years, I've never seen a physician lose personal assets from a malpractice suit. It can happen, but it's very, very rare. Next is life insurance. At the beginning of your career, you may need anywhere from no insurance if you have no dependents, to significant insurance if you have several dependents counting on you to provide for them in the future. There are two main types of life insurance, term and permanent. Term insurance provides simply a death benefit if you die during the term of the coverage. This is life insurance in its most basic form and is the type that's most likely appropriate for young physicians. Permanent insurance is a combination of death benefit and an investment vehicle. Types include whole life, variable life, universal life, and a bunch of variations of the same. There are some interesting tax treatments and estate planning uses for permanent insurance, but in a lot of cases, buying term while you are in the initial stages of building wealth makes a lot of sense. In both cases, you should consider paying the premiums post-tax so that the benefits will be tax-free. The next area you'll likely want to consider is disability insurance. Disability insurance provides you an income if you're unable to work. As a young physician, you're significantly more likely to become disabled than you are to die. Long-term disability coverage typically starts 90 days after the injury. Short-term typically starts 7 to 14 days after the injury and goes up to day 90. If you don't have a 3-month emergency fund set up, short-term disability can bridge that gap. You can often access affordable long-term disability coverage through the AMA, your specialty society, or your employer. There are private policies as well which may have specific provisions that you want to have, so you should discuss these with your financial planner. My opinion is that you should have as much basic disability insurance as you can get. You should also pay the premium after taxes so that if the benefit is ever needed, it'll be tax-free. Homeowners, renters, and automobile insurance is something that you also likely have. The main risk I want to address here is the liability portion of these policies. The basic liability coverage included in these policies is likely woefully inadequate for someone with your future income and growing wealth. It's unfortunate, but as physicians, we are keenly aware that we are a common target of plaintiff's attorney. If you or a member of your family are involved in an auto accident where someone is hurt, or if someone is working at your home and is injured, the sad fact is that as a physician you are more likely to be sued. It's therefore important to have adequate liability coverage on these policies. I would suggest that you make sure that the coverage meets the minimum amount expected or needed by the next policy I recommend, an umbrella liability policy. The umbrella policy takes the minimum required liability coverage on all of your other policies and provides additional coverage up to a much higher level, typically $1 million or more. The cost of a $1 million umbrella policy is pretty reasonable at $300 to $400 per year and is well worth it in my opinion. You should make sure you set up a solid foundation of insurance with your financial planner to protect the future income and future wealth you've been working so hard to achieve. To summarize, this will include at a minimum adequate malpractice insurance, a term life policy with death benefit amount based on your individual circumstances, a group long-term disability policy to cover as much of your current or future income as possible, and if you can obtain short-term disability coverage at a reasonable rate, I'd suggest that also. Our group provides this benefit and it's been a huge help to many providers over the years. Adequate liability coverage on your property policies that will meet the minimums required by the next one, the umbrella liability policy of $1 million or more. This wraps up the 5 laws of money. Number 1, you don't get wealthy at work. Number 2, wealth comes easiest to those who take advantage of time. Number 3, wealth grows rapidly for those who follow the 80-20 rule. Number 4, wealth is attracted to investors but flees from gamblers. And number 5, wealth grows safely for those who protect it from risk. In the next videos, we'll discuss how to monitor your progress towards wealth and some specific issues like student loans, mortgages, and purchasing luxuries.